Thanks. Good morning, everyone. Thank you for joining today's webinar. As usual, welcome to all to the weekly Saturday knowledge sharing webinar organized by Mehta and Mehta. Welcome you all. Our today's topic is webinar on the masterclass on Companies Act 9 and insight into the deposits, including the taxation and accounting aspects. Friends, now this will be added features of Mehta and Mehta webinar. We'll now club accounting and taxation aspect of all the topics, because as a CS, we should also have knowledge about this aspect, and hence we have added this. And friends, to just share happiness with you that today is a 150th webinar of Mehta and Mehta. It can be more, but properly we started counting and it is 150th. And with us today is my good friend Sonali Sanas, Chief Legal Officer, CS and Strategy, Saurashtra Cement Limited. Welcome, Sonali.
Thank you
for your time. To introduce Sonali, she is a postgraduate in financial management from Bhopal University, graduate in law, holds 1-year diploma in general management from IIM Raipur. She has also undergone an advanced management program from the Wharton School, University of Pennsylvania, Philadelphia, and is a Wharton alumnus. Welcome, Sonali. I know that this is something very good thing you have done after a long year. I think you have done last year, right? Or 2 years?
Yeah. After almost 22 years, 23 years.
Oh, great.
Yeah.
Learning never stops. She has around 25 years work experience in regulatory affairs, corporate and other operating laws like land, mining and power. She worked as a group company secretary for Dainik Bhaskar, DB Corp Group up to 2009. From 2009 to 14, she was associated with Ispat Mittal Group as Vice President, Corporate Affairs, and was responsible for the Pan-India properties, legal, secretarial, and with corporate restructuring as the main forte. She is presently working as a Chief Legal Officer, CS and Strategy of Saurashtra Cement Limited. She is also legal head of the Mehta Group. She is associated with Mehta Group since last over 9 years. This is different Mehta, friends. This is not Mehta and Mehta. Thanks a lot, Sonali, for your time. And friends, he works very good strategy part in the industry specific of cement industry. She is helping in drafting policy and also regulation and being in touch with the ministry, and she plays a very crucial role. Very good to know that, Sonali. Welcome for your time. Thank you. Welcome to Mehta and Mehta.
Pleasure, ma'am.
Yeah. Friends, along with us, as usual, we have our moderator, Mr. Bala. As you know, Mr. Bala is company secretary having almost 4 decades of experience and with worked with Foseco India and regular speaker at various forums and regular writer of various articles. Also, Mr. Sudhakar Sarvatula, Chief Consultant, Mehta and Mehta, and he was a prominent personality associated as a chief consultant with Mehta and Mehta. He is a member of Institute of Chartered Accountant, ICSI, and Institute of Chartered Secretary and Administrator UK, and worked as a vice president of the corporate secretarial department for Reliance Industries Limited for 17 years. So, friend, today's our presenter is Miss Nupur. And Miss Nupur, okay, Kalyankar, I will say. Ms. Nupur Gadekar is a member of ICSI as a practicing professional and has completed MCOM and pursuing law. She has worked as a consultant with various leading practicing CA and CS firms, and comes with experience of more than 5 years in corporate secretarial compliance, secretarial audit, internal concurrent audit, PMS broking companies, and she heads our Vasi branch. Welcome, Nupur, and wish you best for your presentation. I'll request Ms. Sonali to say a few words on the topic, then Mr. Sudhakar, and then Mr. Bala, and then Nupur can start the presentation. Friends, as usual, put your questions in chat box. It will be taken up by moderator at the right time during the topic. And at the end of the session, Whosoever raise the hand will be allowed to say and ask the question or discuss the topic. Over to Sonali. Thanks a lot.
Thank you, ma'am. So, Chapter 5, Friends on Deposits under Companies Act 2013 and the company's acceptance of deposit rules 2014 continues to be ignored in many of the cases if the companies are not actively accepting deposits. So many companies start taking corrective actions if the auditors point out on certain violations. So deposits are not only the monies which is formally invited as deposit, however, it also includes all the monies being mobilized by companies if not specifically exempted under the deposit rules. Further, the company is holding any such monies which qualifies as deposit, then there are other provisions of the Act which we will see in the presentation, which also becomes applicable in certain cases. Like such companies needs to have a nomination remuneration committee, a stakeholder relationship committee, if otherwise also exempt under the Act. Further, there are other restrictions for all, like no dividend can be declared by companies defaulting on repayment of deposits. Therefore, in view of the cascading effect of the deposit-related provisions, the awareness, the monitoring on the applicability, and the right interpretation, I would say, on the deposit rules under the Act becomes utmost important. And I hope you all will become more informed on the provisions relating to the deposit with the esteemed panelists today, and also after going through the presentation being done by CS Nupur. So,
thank you.
Nupur, yeah.
Yeah, friends, as usual, I was supposed to tell that only, that people just say deposits. अरे मेरी company तो deposits लेती नहीं है. But friends, this is a very difficult and dangerous topic. You have to keep in mind what you are accepting or not accepting, but still you will be catched in that provision. So you have to be very careful in all the transaction, and the same your accounts department should be instructed, because this transaction happens at the accounts and finance department level. So you have to communicate and say that what should not be done, or you should secretarial department should be informed in advance. And that's why it has a very ticklish issue, which will be discussed during our webinar session. Over to Sudhakar, please.
Thank you, Dipti. Good morning, everyone. In fact, acceptance of deposits used to be one of the source of mobilization of the funds, and it used to be the darling of all finance people. In fact, when I was in my budding phase and when I entered the profession as a chartered accountant and company secretary in 1985, that time I used to handle the dual portfolios and handled various deposit schemes for different companies. In those days, that means during 80s and during 90s, fixed deposits is such a significant source of funding, especially for short-term funding. One of the reasons for that is very little botheration. You don't need to go to the banks. You don't need to convince them about the funds requirement. You don't need to go with the rigor of the banking system. Just give an advertisement, have some good credit rating, give some good financials in the advertisement, and people used to get attracted. Another feature of the fixed deposits in those days used to be that higher rate of interest. If the banks were paying 10 to 12%, the fixed deposits used to pay 15%. In fact, if any of you are aware of, the senior people might be knowing that the brokers used to give 2 to 3% cash when you are accepting deposits. In fact, when my father retired in 1995, several brokers approached him. They used to keep a tab of the government employees who were retiring. Several brokers approached him and lured him that we will give you to 3 to 3.5% upfront cash if you go for deposits with us. So my father asked me, should I go with them or not? I told him strictly no, no, no. Because the moment a company is giving you 15% on record and 3.5% half record, apart from that thing, they're also paying the brokerage, means 20 to 22% was they were giving to mobilize the funds. And ultimately, it turned also okay, several companies used to default in those days, these fixed deposits rampantly. And ultimately, the deposits completely lost its charm. In addition to that, also, the Sharda Chit Funds case, which of course Nupurvi is going to discuss, this also has given some kind of an ammunition to the draftsmen who were drafted the Companies Act 2013. And the past experiences, ultimately, the requisite stringentness have been brought into the provisions between 73 to 76 sections and the rules thereof. Now, every Tom, Dick, and Harry company cannot accept the deposits. You have to become an eligible company to accept the deposits. And based on the turnover as well as your net worth, you will become eligible to accept the deposits. And the security more or less is mandatory now. Unless until the deposits are secured, you cannot get that kind of a deposit. So security aspect has also been brought in. The depositor trustee have been brought in because you have to create the security in the name of the trustee. Over and above that, if you remember, in the initial phase of the Companies Act 2013, the insurance for deposits was also mandatory. But
Yes.
no insurance company came forward with any kind of policy. Government has extended this for 2-3 times every year after year, they extended, and ultimately no insurance company could dare to bring a insurance policy for this kind of for repayment of deposits in case of any default. And ultimately, government was to withdraw that insurance mandatory factor. However, several new concepts have been brought in as the deposit trustee has been brought in. Then you have to also create a DRR. This is not debenture redemption reserve, but deposit repayment reserve also is to be created. And last but not the least, the TPT3. The TPT3 form is going to be, according to me, like an MRI of a corporate. But as Deepti and Sonali has rightly mentioned, it is irrespective of whether you accept the deposits or not, you have to file DPT3. DPT3, every inflow of fund is more or less connected to the DPT3. In fact, if you understand the DPT3's importance, what is in store for us, we can very well understand. I am saying this today. In fact, I know in the Companies Act 2013, in the past, I made a lot of predictions which are more or less coming true. Another prediction I'm telling you to all the participants today, the amount of data, again, what we are furnishing in the name of DPT3, if the same is linked with your financial statements, ROC is going to start very soon that data mining, and Professor Bala will get more opportunity to write more articles on how the ROC is going to penalize the corporates on this. So with this prediction, I give a pause here and request Bala to take over. And while Nupur is making her presentation, I will pitch in wherever it is required. Thank you very much.
Sonali, you can also pitch in whenever you wish, as a, you know that since you are earlier panelist as well. Yeah, Mr. Bala.
Good morning to all of you. I have a very great pleasure in meeting you all in today's session. This topic is not the one topic which is actually frequently conducted by any of the people. Rather, I would say hardly any people conduct a webinar on this particular topic. That is number one. Number two, our panelists already emphasized what is the deposit. The question arises, any money received by the company is actually supposed to be repaid back. Whatever the terms are there, either it is in terms of the service or in terms of the goods or in terms of repayment, whatever it is to be paid back. The question arises in the mind, when the money is received by the company, is it not loan? Then what is deposit? This is the final point here. Because whatever the money is received, whether it is deposit or it is loan or it is something else. Because sometimes what happens, we received the government subsidy, we received the various other concessions, etc. And all the things in the term of the incentive, all those things are also there. So in light of that, first of all, identifying what is deposit, what is loan, what are the consequences is actually the starting point, according to me, when you are talking about a DPT3, because when we DPT3 is filing, you have to give what is the exempted deposit, what is the deposit, what are the things, all those cases are there. This is the case. And second thing is the very final point here is deposit is the money which is actually like a bank, as Sudhakar puts it. The interest rates are attractive when you are putting a deposit. So what happens? People wanted to keep their money instead of in the bank with the company so that they get a better return from the companies. That is the whole purpose. So if the person is willing to keep the money instead of the bank to the company, automatically that becomes the deposit. Whereas the company takes money from either the financial institutions or banks or even the individual for certain purposes, then that context that becomes a loan. So final distinction has to be analyzed to that extent. So Nupur is actually going to take us the various provisions so that she will analyze, so that in the course of the presentation we will understand what is deposit, what is loan, and any other things are there, what is to be dealt in, and all those things which we will be actually seeing. That is one. And second thing is, I'm actually called back Sudhakar's word. Some of the senior people will be knowing those years 80s or 90s. When I actually started the company secretary profession, every year, as soon as the AGM is over, immediately we used to have the extended board meeting. And that board meeting, we have to get the deposit forms approved, necessary things, etc. Then very next day, after the AGM is over, the advertisements actually used to be released for the inviting the deposit. Because that was one of the major source of the money, because one thing those days, it was actually unsecured. Now the security and deposit trustee, etc., which has actually come as we travel along with the rules have undergone a change. Otherwise, it was simply a unsecured loan those days. So the deposits being unsecured, so it was very easy to procure the money. As Sudhakar puts it very clearly, if we have the good financial, we have the good rating, if the company is having a good enjoying the names, etc., and not seeing anybody would like to pledge in the deposit. So that used to be the case those days. But as he puts, there are people who are in the market who actually act unscrupulously. Like he cited the case of the Sharda scam. There are a lot of other things are there. There are other states also. Sharda was the major one. Even today it is going on. You might be knowing the news also. So with all those things, the people thought that the hard-earned money of the investors is actually getting away. They are losing the money. So they want to bring the stringent regulation on that. That is the reason why the various stringent regulation has been actually brought in today. Otherwise, in the 1956 Act, in the period of 85, 90s and all, it was very simple to raise the deposit. And there was not much of the regulation from the MCA. There was only regulation from the RBI. We had to only file the RBI return, that also offerly. That is the end of it. So that used to be the case. But in spite of this, people were actually being exploited. They were actually being cheated. Money was actually going away to do this difficulties, etc. The MCA has brought in from more and more amendment. Today it becomes very strict. As Sudhakar puts it, who can invite deposit, eligible company, what are the criteria to be fulfilled, what are the formalities, what are the procedure, etc. I think Nupur is going to take us through. So as Dipti puts it, whatever the queries you have, please start putting in the chat box. We'll be discussing as and when the presentation is going on. At the end, of course, if anybody would like to talk, we can raise the hand at the end of the session. We can actually allow you to speak. We can discuss. I think with this, I give a stop here. I'll ask Nupur to take us through the presentation. Over to Nupur, please.
Thank you, Mr. Bala.
Yes, sir. So my screen is visible?
Yeah. Screen is very much visible.
Yes. So very good morning and a very warm welcome to all. So before starting with the presentation, I would like to touch upon the landmark case, which is very prominent in the field of deposit, which is a Bengal-based company called Sharda. So they initiated with safekeeping of monies of rural people, majorly farmers and fishermen, of course. So the investment was being brought into picture from these smaller investors. More than 25,000 crore amount was raised from these smaller investors, promising them of an interest up to 100% as well. So that was a small saving scheme, basically, which took form of chit funds to disguise the chit fund rules actually. And they also started along with issuing debentures and redeemable preference bonds as well. So thereby they violated SEBI rules for issuing these instruments for more than 50 people without issuing prospectus. So that came into SEBI's radar in 2009 and 2011. but due to certain other advisors and certain political parties involved in these scams, they complexed the corporate structures and evaded certain provisions as well. Later, Mr. Sen still is, under procedure of paying those deposits which are still under non-repayment, we can say. The inflows were always lesser than the outflows, and they also promised the agents and brokers to pay more than 25% of the brokerage as well. This also has resulted in major of the suicidal commitments by several rural people along with the agents and brokers also. So this was a landmark case for prominently or meticulously drafting the chapter 5. Uh, so they made it quite sure that companies cannot raise monies easily for even the genuine types of businesses. So they expanded the deposit definition to more of similar types of monies or any amount of monies that a company might raise. So yes. So coming to the chapter, we will be covering the chapter 5 of acceptance of deposits along with the rules. So the prohibition, we must understand that there would be two types of companies. One wherein the routine course of business is about accepting and lending of monies, which is financial institutions or banks for that matter. Secondly, the prohibition is for the routine type of companies which might be dealing into other types of businesses, say for example, manufacturing or trading or any other routine course of business. So the prohibition is about accepting of deposits in active sense, which might include the terms, complying with the terms and conditions as per the provisions and the rules made thereunder. Again, Section 45 also mentions certain repayment of deposits. Similar to the Sharda case, still they are repaying the deposits. That is why the need of Section 74 as well. So we'll discuss the deposit in terms of definition in the coming slide, but we must understand that previously it was quite cost effective or an easier method for companies to raise monies. So that was the prominent feature. Again, about the utilization of deposit proceeds, there is no specific restriction as such, but one might draw inference from its memorandum and articles of association for utilization of these types of proceeds. Secondly, wherever a company wants to use the proceeds in furtherance of any investments, so say for example, starting any type of financial service, for that matter, it will have to get itself registered under NBFC criteria of Reserve Bank at least. So coming to Section 73 of deposits, like we already discussed, it is applicable to companies which are not banking companies, non-banking financial companies, housing company, or any company specified by the central government. So coming to the definition of deposit, we must understand that previous definition under the Companies Act 1956 used to include two ingredients, one which was deposit and the other one was loan, or the wordings were borrowed funds, which is similar to loan. So this is somewhat similar, but 2013 definition has been expanded to include the third ingredient, which is any other firm. Now, for explaining what any other firm would mean, they have already taken some certain inference from the principle ejusdem generis, which means a similar kind or same kind of deposit and loan. So, any type of a transaction similar to the deposit or loan, any colorable transaction will also include in the definition of deposit. Secondly, they have excluded certain categories of deposits or amounts that has been raised by the corporates, which might be into the ordinary course of business, which is prescribed under the rules. Now, we must understand that these are exempted deposits only for the following or compliance of the terms and conditions of active deposits. So, these have to be reported as well. And these are included in the definition also. Coming to the difference between deposit and loan. So firstly, we must understand that deposit is quite a wider meaning. It might include loans as well. And deposit is something wherein, it might be started for a basic reason of, say, for example, investment. Or for example, it might be provided for certain performance of contract like security deposit or any other matter. Here the benefitor would be the depositor who might be getting interest for that matter. Secondly, while speaking about loan, there is a basic need of the borrower for calling for a loan. And secondly, he is at the beneficial side, we can say. Secondly, Bombay High Court mentioned certain other provisions as well, saying that a depositor is a prime mover, whereas borrower is a prime mover in case of loan. Now, we must also understand that the terms of the agreements under a deposit is majorly with or the major say is from the depositor. Whereas in case of a borrowing or a loan, the terms and conditions are priorly made by under a stipulation of the loan provider, say for example a bank or a financial institution or any lender for that matter. Again, deposit again is something more than mere loan. Also, there is one more provision briefing between the deposit and loan, that both the parties to the contract should agree whether the amount being executed is a deposit or a loan. Again, now who is a depositor? Firstly, he would be a member who has been providing deposit
1 minute,
under
1
the.
minute, Nupur, 1 minute. See,
Yes.
to understand the deposit and the loan difference, another aspect is, in case of the both the places, the resources, I mean, money, we know that very well. In case of deposit, the depositor is going and depositing the money, whether it is with the corporate or whether it is with the bank, whatever it may be. So the resource provider is the depositor, but he is going and giving it to the corporate or to the bank. And the terms and conditions of that acceptance is not dictated, not by the depositor. The terms and conditions are determined either by the corporate or by the banker. In case of a loan, what happens is the borrower is going to the lender. Again, it may be a corporate or again, it may be a banker. And there, who is determining the terms and conditions is again the lender. It is not the borrower. That is the primary difference between a deposit and a loan. In case of a depositor, the depositor is going and asking, I want to make a deposit. Acceptance or not acceptance depends upon the other party, that is corporate or the bank. Whereas in case of a loan, it is other way around. Yeah.
Okay. So coming to the definition of depositor, firstly, he might be a member who has deposited certain amount with a company under section 73. Secondly, a person other than a member. Now this, we must understand that the second provision is for public, as in company going public for acceptance of deposit. So this is under section 76. Now let's understand the categories of exemptions. So the first criteria is about any amount received from any government. So whether it may be a central government or state government or a local or statutory authority which is constituted under the Act of Parliament or state legislature. Secondly, any amount for whom the government guarantees the repayment. Even those amounts are exempted from consideration of the deposits. Secondly, any amount received from foreign parties under FEMA. Now we must understand they have included almost all set of parties herein and all set of transactions, but this would be subject to those transactions which are allowable under the FEMA. So next is any loan or any facility that might be accepted by a company from any bank or any financial institution for that matter. So any amounts received from any banking company, State Bank of India or its subsidiaries, or any new bank under execution per se. Other than that, any corporate bank, any insurance companies, even those amounts received from these particular institutions are exempted. Any amount received against issue of commercial paper or any other instrument issued by the Reserve Bank of India, even those amounts are treated as exempted deposits. Other than this, amount received from any other company. Now we must understand here that they have mentioned a company and not a body corporate. So we must understand that company includes a company which is under the which is defined under the Companies Act 2013 or 56. Next is any amount received against subscription of securities. Now there are two amounts involved here. One is a share application money pending allotment, or any advance towards the allotment of shares which is pending allotment. There is also one condition with respect to this, that any securities have to be allotted within a term of 60 days on the receipt of the amounts. It shall have to be refunded if not allotted within 60 days. So it has to be refunded within 50 days of completion of the 60 days. Otherwise, it will be treated as deposits.
One thing, Nupur, here. So any amount which is received under ESOP scheme also, and that is also treated as same as share application money, although there are certain exemptions under Section 62 of Companies Act. And for them also the deposit rule applies as is for any other share application money being received.
Okay, ma'am. Yes. So now the refund has to be refunded in cash. There cannot be made any other adjustments via any other transactions for the sake of refund. Now, any amounts received from a director or any relative of a director.
Go back to the previous slide. See, this share application money, in fact, any kind of advance for share application money, that it is to be allotted within 60 days, the allotment has to take place. In case if the allotment has not taken place within 60 days, the money is to be refunded with whatever the interest prescribed within another 15 days. So in case on the 75th day, if the money is not refunded as stipulated, then it amounts to a deposit, it won't be anymore an exempted deposit. So now the question comes, is it a deposit from the 75th day onwards or from day one? It will be treated as a deposit right from day one, not from the day 75th. For example, when you are preparing the financials as at the end of the financial year, that is 31st March, if you have accepted any share application money and that you are not allotted the shares, you are on the 75th day is falling on say 31st March, that particular day you are making a non-compliance, and obviously whatever the penal provisions will be there, they will get triggered. So please ensure that in the DPT 3 also you have to say that it is no more an exempted deposit. You have to say it as a deposit as such. Yeah.
Okay. Now, any amount which is received from a director or a relative of a director. Now, we must understand that for any companies, a director can provide loan, but a relative of director can provide loans to only private companies. Again, now these individuals can provide loans, but at the time of giving such amount, they have to declare that the amounts are from its own funds and not from any borrowed funds. Also, the same has to be reported in the board's report. Otherwise, these amounts are not treated as deposits. Any amount raised by issue of bonds and debentures. Now, we must understand that for any bonds and debentures, it has to be secured to be exempted, and it can be secured by first charge or a charge ranking pari passu with the first charge. Secondly, other bonds and debentures shall be exempted only if it is a convertible, compulsorily convertible to shares within a time of 10 years. And thirdly, these bonds and debentures shall not exceed any market value of such assets, and the valuation have to be provided by a registered valuer to be exempted. Secondly, any amount of non-convertible debentures which are unsecured and listed are also exempted. So unsecured, unlisted debentures are not exempted. Next is any amount received from any employee. Now there are
Somebody has put up a question here. Optionally converted debenture issued to outside India is FDI or foreign loan or deposit.
So I think firstly the FEMA Act will be triggered. So can you repeat the question?
Yeah.
See, till the time the optionally convertible debentures are not converted, till such time it will be a debt only. Okay. So you have to comply with the not FDI rules, but the what's called as foreign lending rules. Once it is converted, then only it takes a shape of the FDI, not before that. And definitely, as Nupur has rightly mentioned, you have to see the FEMA rules also, when it is in the shape of a debt and when it is going to take the shape of a equity.
Yes.
Okay.
Okay.
Go ahead, Nupur.
Now, yes. So any amount received from any employee. Now there are certain stipulations under employment agreement that there has to be paid a security deposit by an employee for performance of his contract. So those amounts are also exempted. Next is any interest-free amount received by a company which is to be held in trust. Even those amounts are exempted. Now, this is again a prominent exemption. So, firstly, any advances for any supply of goods or provision of services, even those are exempted, provided the appropriation has to be made against the goods or services within a period of 365 days. We must understand here that deposits are those which are unidentified amounts. So, identification of the amounts has to be made within a period of 365 days. Secondly, any amounts in consideration for any immovable property under an agreement. So these amounts are also exempted. Next is any security deposit for performance of the contract or supply of services. Even security deposits, those are exempted. Any amount received for capital goods. Now, for understanding first, second, and the fourth pointer for supply of goods, immovable property, and capital goods, all the three goods and services are to be permissible goods. One has to check the memorandum articles as well. So, prohibited goods or services and are not covered under the exemption. Next is any amount received towards any.
Nupur, go back to previous slide.
Okay.
You're running, Nupur, I think. You don't run.
Okay.
See
Nupur,
that, in fact,
yeah.
several company secretaries make a fox pass on this, because if you see in the WhatsApp groups and all, most of the time the question comes, the loans given by LLPs, loans given by the directors, loans given by the relatives, all these questions. There is never I found any question as far as this point 12, rule 12 is concerned, where it says that for the supply of goods, if you have received any advance, if it is not appropriated within 365 days, it is going to taking a shape of a deposit. I'm sure that unless until the company secretary is very careful while scrutinizing the financial statements, if any kind of advance, if it is lying beyond 365 days, for whatever the reasons it is, if it is not appropriated against the supply of goods, that is going to take the shape of a deposit. And again, the same thing, non-compliance provisions will get triggered. I have my own apprehensions that how many secretarial auditors also go through this particular aspect, and how many statutory auditors also. The statutory auditors might be certainly, definitely they might be giving a look at this particular aspect, but as far as the secretarial auditors are concerned, I have my own apprehensions. Because several times it happened that there might be some kind of disputes. And that dispute is whether it is a genuine dispute or an artificial dispute, also one has to see that. Whatever it is, that if that appropriation is not taking place, it is going to take shape of a deposit. So my submission to every company secretary participating here or chartered accountants is that please ensure that any kind of advances received for supply of goods or for any kind of immovable properties or for any other purpose, is it pending, lying as it is not appropriated. You have to see that whether it is falling under the exempted deposit or in the deposit as such. The same point of time, Nupur, please go to Rule 6 also. I think that any money accepted from a company. Just go back to your previous slide.
Yes, sir.
See, this is another important thing. Rule 6, it talks about amount received from any other company. In fact, there are two schools of thought is there here, wherein the rule says that any amount received by a company from a company, it is an exempted deposit, irrespective of the nature of receipt of that particular money. Some people, what they say is, under the deposit rules, if there is a specific provision is there, which is says that it is not an exempted deposit, it will not be an exempted deposit. But my view is that Rule 6 is going to be a savior for most of the times, provided if that is taking, one company is taking the money from another company for any purpose it is an exempted deposit according to me. Of course, if anyone is interested, you may go through Dr. Chandratra's commentary also, wherein he also has concurred with this view that any amount received for whatever the purpose it may be, irrespective of the other rules are exempted it or not, it is an exempted deposit. So whenever you face any kind of situation in as far as the Rule 6 is concerned, please see that the money which has come to your company, is it coming from any other company? If that is the case, you have some kind of a leeway to get yourself saved from the getting it into the shape of a deposit. Yes.
Even our institute publication, which is published on the deposit, also says the same thing, what you said actually.
Yeah.
That is it.
Second,
Sonali, I think you can share your practical things, how you are dealing it.
That means to give an example under Rule 12, when we say that amount received in the course of for supply of goods, and within 365 days the amount is not appropriated, then it is going to take the shape of a deposit. But if that money comes from another company, then you can take that rule under Rule 12, though it is being considered as a deposit, but you can take the shelter under Rule 6, wherein it says that the money is received by a company from another company, it is an exempted deposit. That is the example I want to give you here.
yeah. Secondly, in most of the cases, practically what companies does, they make contracts for 11 months and they try to ensure that any advances lying against any of the parties, it is paid back within a specific time period, so that the issue of deposit doesn't come as an eye opener or as a trigger for the companies during the last month of March. And that way you can better plan out as to how you don't get caught into this deposit provision of Rule 12.
Yeah, only Sonali, I do appreciate what you say, but one caution here people have to say is that when you are refunding that advance, don't make a book entry only.
Yeah, it
By
has to also be
merely
proven.
reversing the transaction, it won't happen. The money has to go out of your banking system and has to again come back to your book company through a banking system.
So
I'm sure that, Sonali, this is what you want to say also.
So the agreements also has to be made in such a way that on the 11th month getting over, the amount actually gets credited back to the party. So that should be the language of the agreements also.
Yeah, you said it correctly. You touched upon the, what you call, hitting the nail. The amount should be credited back to the person. Yeah. Because many times people think, okay, we debit and credit. First day we debit, next day we credit. That takes care of it. That is not the case. That is, as Sudhakar puts it, is only a book entry. Virtually nothing is happening. Yeah.
So
Yes,
many
Nupur.
companies, they have a SOPs for this. The purchase orders which are drafted, the agreements which are made, they are made in such a manner that after 11 months, there is no advance outstanding in the books of the company, even though it's a regular party with whom we are doing business. Yeah, Nupur,
Go ahead, Nupur.
continue.
Yes, yes, ma'am. So other advances would be some amounts received towards any warranty or maintenance under contract, any amounts received and allowed by any sectorial regulator for that matter, or any amount which has received as an advance towards any subscription of any publication for that matter. Next is again an amount brought in by the promoters by way of unsecured loan. Now there are certain stipulations wherein a company wants loans from certain banks and institutions. Now these institutions have a stipulation that even the promoters will co-pay for that matter. So any percentile, say for example 15-20% are also to be brought in by the promoters along with the banks. So that is also an exempted amount for the promoters amount. Next is Nidhi company and chit fund company amounts as well.
In this case also, the amount brought in by the promoter only to that extent what it is stipulated is an exempted deposit. If the promoter bringing money over and above what is stipulated, that will not be a exempted deposit.
Yes, yes, sir. Yes. Okay, so now Nidhi companies and chit fund companies also the amounts raised by them is exempted, but we must understand that it falls under the definition of deposit and they have to report the same. These are under the radar, we can say. So all the amounts have to be reported. Any amount received by the company under collective investment scheme which is regulated by the SEBI, even those amounts are exempted. Now coming to an amount received by a startup company, we must understand that startup companies are the newer companies, newer ventures we can say, which are quite promising in terms of growth, but at a much riskier side. And we must understand that the small investors or small amounts are not exempted. It has to be gone through the deposit provisions as per the terms and conditions. Only amounts which are more than 25 lakh rupees received from a single person at a single tranche has to be exempted. Now these amounts are to be made received via convertible note also. Now convertible note is an instrument of debt uh, mentioning the conversion into equity shares. Now the conversion is also stipulated that the conversion should happen within a period of 10 years, then only it shall be exempted. Next is any amount received from following intermediaries with SEBI, whether it may be alternative investment funds or any venture capital funds or infrastructure, real estate and mutual funds. Now these amounts again, they are exempted but have to be reported in Form DPT 3. Now let's consider the examples for that matter for understanding the exempted deposits in clarity. Any area-based incentives received under GST or any government grants or any export sales incentives received from a government basically. So these are exempted but to be reported under DPT 3. Secondly, any loans, cash credit facility, overdraft facility, or any working capital facility provided by any bank or financial institution, those amounts are exempted but to be reported. Now, any amount has received from an LLP. Now, we must understand that intercorporate deposit exemption is limited to the company and not body corporate. So, LLP does not fall under the criteria of under the definition of company. So, it is not exempted.
But Nupur, just one second. If it is again supply of goods and services, then 365 days become applicable here. So we can just
Yes,
move
ma'am,
forward.
yes.
We can't say that it's not applicable.
True, ma'am. True. Yes, of course. Next is any amount received from any foreign
Just 1
company.
minute, Nupur, 1 minute. So
Yes.
actually what Nupur is mentioning is, if it is coming in the shape of a deposit, then it is not an exempted deposit. What Sonali is mentioning is, if that is coming in the shape of an advance for supply of goods, if it is appropriated within
Okay.
365 days, it is an exempted deposit.
Okay, sir. Yes, yes.
Yeah. precisely a deposit of any color or nature, basically. Yeah.
Okay. Yeah. So next is any amount received from any foreign company. Now, foreign company does not come under the picture of company. So under intercorporate deposit exemption, it is not exempted, but it might be exempted under the foreign parties exemption. But one must understand the amount of transaction involved, which has to be permitted under the FEMA guidelines. That has to be looked into. Next is any share application money pending allotment. Now the allotment has to be done within 60 days and refunded in next 15 days. Otherwise, it will be treated as deposit. Sir, we want to elaborate on this, or we'll
Yeah,
continue?
this I have
This is what
already
he has already
mentioned.
explained. No, he told
Okay.
very
See, that
clearly in the
Yes.
beginning only. Na?
another
talked
thing
about
is another thing is not only the share application money, even in case of any advance received for supply of goods, if it is not appropriated within 365 days, it takes the shape of a deposit right from day one, not from the date
Okay.
365. Because
Yes.
otherwise, what people will do is they will go on starting accepting the deposits in the shape of a supply of goods and other things. And maybe that, in the 365th day, they say by that the goods have not been supplied. Please remember that whenever this fallback situation is there, it will be on from day one, not from the day last. I mean, the last day of that.
As you rightly put, Sudhagar, the lawmakers uses the word not only identified, they also uses the word appropriated.
Correct.
So in which case, what happens is, before the 75th day, your book should actually show that it is actually squared up. If not, that is not the case, because identification is not only a sufficient. Because again, if you say further extended, whether it is delivered or not delivered. So if the so long as you, as you said actually some time back also when we were discussing yesterday, if the goods are already packed, it is actually put in the movement, it is pending for delivery, then it is okay. But which is not the case. Then in case it automatically become a deemed deposit. Yeah.
Yes. So again, there is one more ordinarily asked query, whether a director, when a director is a shareholder as well and puts in some amount in terms of deposit. So your director is exempted, as we have seen in the exempted provision, but there has to be looked upon into the limits when a director would be putting in amount under a scheme of deposits which is issued specifically to the members by a corporate. So if you want to put some light on this, we can elaborate.
Yeah, see that the question comes that if it is a director, then there is no limit on the amount what he is giving as a deposit. Whereas in case of a member, there is a limit is there. So now the question comes, suppose if I am a director as well as a member, when I'm giving a deposit to the company, am I giving in the capacity as a director or as a shareholder? So always it will be presumed by default that it is from a director, unless until there is a particular scheme which is inviting deposits from the members of the company, and there I am giving that deposit, then I will be giving in my capacity as a member of the company, not as a director. So that point of time, there is that say whatever the limits are there, that will be applicable to me.
Because whenever the person is giving a loan, who is actually a member of the director, he is not going to specify, while giving a loan, I am giving as a director, I am giving as a member, he is not going to specify that. It is only when the company is actually receiving it. As Sudhagar puts it very clearly, if a director and the member both are there, if he is giving a money, it is, as he rightly used the word, presumed. So it is presumed that the director is actually given the money. Unless until particular scheme what Nupur has actually put it, the company has floated and inviting the deposit from the public, and in that scheme, he contributes the money, then in such a case, it becomes from the public, not from the director. Because it is definitely, looking to the nitty-gritties and getting to know the things, do the right things. Yeah.
And many times the money gets received from the directors when the business is in the need of funds. So that way the limit, logically also it is right that what the provisions are there in the law.
So Sudhakar, in this situation, If you said that scheme is there for inviting from member, so in that scheme, no member give deposits, only director give that deposit. Still, it is exempted, right?
No, still it is exempted, but with a limit. See, from the members, there is a limit you can accept for the deposits. So that limit will be applicable. Suppose if I am as a director, I am giving any kind of deposit, there is no ceiling limit on that.
Okay, got it. So even though, so you have to take out the scheme for the members, and director can
Correct.
be in that give a deposit, but subject to the limit
Yeah.
of members. Even though no members give the deposit, but still that limit will be applicable and it will be exempted.
Yeah,
Right?
the moment you take the money from the public, the automatic the limit applies actually. So whether it is 1 member, 10 member, whatever it is, that the deposit received should be within that limit. Yeah.
Otherwise, scrap the scheme altogether and let the director give that money. Then it will be in the capacity as a director, he is depositing that money with the company.
There is no limit.
There is no limit on that, and that is exempted deposit.
Okay, thanks. So there is a question. So limit is exempted. Mr. Bala, you can take that.
Yeah. So here there are one more question is also related to that. Money is actually received from an overseas employee of a company towards a ESOP. He is also a director. Purpose code mentioned in that inward remittance is incorrect, and hence the Indian AD, I think authorized dealer, takes a view that unless this is corrected, it cannot be accepted as towards ESOP. Can it be treated as a loan since the person making the payment is a director?
Subject to FEMA regulations.
There are two issues. One is, as you say, it is the FEMA regulation. Second thing, he is putting something, the authorized dealer and the thing, this seems to be a specific case. Unless we know the
Yeah,
detail of
complete
the
details.
specific case, we will not be able to understand.
Presuming that AD has examined the FEMA regulations and given the right advice to the company, so then subject to FEMA regulations, they can proceed.
Or can the receipt be treated as a security deposit from the employee? Security deposit is altogether something different. Security deposit is kept for a specific purpose. So security deposit should be differentiated between the deposit and the loan. So
Bala, I couldn't understand the question. What is the question here?
Here is, I think it's a continuing question. The same question what he has put. Money received from the overseas employee, director on the ESOP scheme, etc. There he has put, can it be treated as a security deposit?
No, see, that intention when you are remitting the money, definitely you have to mention what for you are remitting the
Here
money.
it is
A person
received.
cannot just give the money like that.
Yeah, that is
In
what
this
I said.
case, suppose in this case, if the overseas employee is mentioning that he is remitting the funds towards share application money for the securities under the ESOP scheme, even if some kind of irregularities are there under FEMA, that will be corrected subsequently, but that will be treated as a share application money only.
Correct.
Not as a deposit from a director or something like that and all.
I will, to clarify, see, when any employee or anyone send or remit any fund in India, this purpose is very crucial and same should be intimated. Now, on behalf of that employee, you can't keep on treating the money received either this or that. It is the person who's sending the money has declared the purpose. Now that person only will correct that purpose. You cannot change and compel AD in India to change the purpose. So no way there is this question will have any impact. You have to get it correctly. Please understand the person giving money will declare the purpose for which he is sending money. That's very clear.
During the correction and as per FEMA regulations and whatever is possible can be done. But right now it seems that the purpose has wrongly been mentioned. It seems like that from the way they have put
So
in
it needs to be corrected.
Yeah. And in accordance with the law, FEMA laws.
Yeah.
And similarly, one more thing also is a general rule is, suppose if I am giving the money, the person who is giving the money to the other person he has to specify the purpose.
Hmm.
The other person cannot determine the purpose. Suppose, say, for example, I am giving the money to you for the share application money. For whatever the reasons it is, there in some kind of errors are there in that and all. The company cannot say, okay, I will take it as if you are giving me an advance for supply of goods or for something else. The company cannot determine. The purpose is always the person who is giving the money has to mention what for
By,
he is giving the money to the company.
by going through this question, purpose is very clearly mentioned. Money is received from the overseas employee company towards ESOP. Very clearly it is there. So as you rightly said it cannot be appropriated any other thing other than the share application money towards the ESOP. So then following that, so limit is exempted for a member who is a director. Yeah, that is always said. If the director gives the money, there is no limit. But if it goes to the members, it is. That is what we discussed. Sudhakar also explained it very nicely on this. Yeah.
Also, sir, for all the exempted categories also, they have specifically mentioned in many of the transactions that those amounts cannot be adjusted to other transactions. So that is also a prominent thing to understand.
Correct.
So the purpose has to be remained same.
If the amount received from the ECB from foreign, even it will be treated as an exempted deposit under the foreign parties.
I think it has to be very much case.
Exempted deposit under which rule?
Yeah, very case specific. It is very
Hmm.
general question which is coming up.
See,
Not very
it
case
has
specific.
come, no, it has come in the ECB,
Yeah,
external commercial borrowing. So I am receiving it as a loan, not as a deposit.
which falls under the exemption category, under the deposit rules. If this is the only information which is available.
Now, from reading the question, that is the only information.
Yeah.
Also, grant received from the bank is exempted deposit. Grant received from the bank, I am not able to understand the question. Grant is generally coming from the governmental agency.
Government,
How,
yeah. Not
yeah, how can the bank use the grant? Question itself is seems to be something. I don't know.
Is it may be for some NBFC or but not very clear.
Yes, Nopur, go ahead. We'll take the questions once you finish the presentation.
Okay, sir. So next is when a director who is a Karta or member of an HUF providing loan or any amounts. So for this matter, Karta or members of HUF is exempted under the definition of relative for that matter. So for private company, it can be exempted. Next is unsecured unlisted debentures. Now you must understand that unsecured unlisted debentures are not covered under the exempted categories. However, if at all these amounts are received from any corporate, as in a company, it might be exempted under the intercorporate deposit exemption. Nextly, outstanding balances of any customer's advances where no transaction has been taken place from last 365 days. We have already seen this. Any advance received has to be allocated or appropriated against the identified goods or service. Secondly, unidentified amount will not be exempted. So there was a case law with respect to Banwarilal, Arora and Sons versus SR Foils and Hygiene Private Limited. Into this matter, the customer had already sent a mail on what categories of the products he wanted. So here, the NCLT drew an inference that unidentified amount of advance is a deposit, and these amounts were not unidentified. It was identified in the first instance itself. So within 365 days, the company has to allocate those amounts towards this product, and the corporate cannot ask for refund from the NCLT under the default of the term deposits. So these were the exempted deposits, and NCLT asked the uh, persons to apply in another type of case and not under deposits.
That means what, here what they say is a person cannot deposit the money with the company without specifying the purpose for what he is giving that money to that company. If he says, okay, you keep this money with you, I will tell you the purpose later. It will be treated as a deposit only. And second thing is, in case of unsecured unlisted debentures, I mean, they will be treated as deposits only, except that if that money is coming from a company to another company, under Rule 6, you may take it as an exempted deposit. So whenever you are making a private placement of unsecured unlisted debentures, in the offer letter itself, you have to clearly mention that you should not, rather, you have to take precautions not to accept money from any individuals or HUFs or any other person other than a company. If you are accepting it, it will amount to deposits. So one has to be about careful.
Yes.
In the construction business, if a company receives mobilizes advances that extend over a period of 5 years, these advances are generally treated as a non-deposit transactions, provided that they are linked to the specific project and are documented as such. According to Rule 21C6 of the company's acceptance deposit rules, such advances are excluded from the definition of the deposit if they are received in the course of the or for the purpose of the business specifying providing services as part of the contract. This is the answer to one of the 10 questions, which is actually received. One of the chartered accountant has actually put up a clarification.
If I am not wrong, the appropriation of advances is only for supply of supply of goods.
Yeah. Goods and services, yes.
Goods and services, not
Yes,
for
yes.
capital goods.
Correct.
So there is no limit. Say, for example, housing finance comes. Suppose there's housing companies. Whenever you book a flat, we do deposit the money with those companies, and the what's called as the handing over the property will happen after 2-3 years only. In the meanwhile, whatever the amount we are depositing with them, it will not be treated as deposits, because that rule is not applicable to the in case of capital goods. The 365 days is only for goods and services. Yeah.
Yes, Nupur.
So coming to the terms and conditions of acceptance of deposits. So the first thing that a company has to do is conduct a general meeting, and the terms and conditions have to be agreed by the company and its members, along with the provision of security or repayment along with the interest. Now there are certain conditions with respect to acceptance of deposits. Firstly, that a company must issue a circular in Form DPT-1 to the members detailing its financial positions, any credit rating obtained, any total number of depositors along with the previous amounts of deposits, also any other particulars that may be prescribed. Secondly, the circular has to be filed with ROC along with the auditor certificate. We'll get into the details of the auditor certificate in the later slide as well. Thirdly, a company has to create one debenture redemption reserve account and deposit 20% of the amounts that are maturing in the following year every year on its 30th day of April. Next is it has to create a charge on its assets wherever it is inviting secured deposits. If at all it is unsecured deposits, all the documents have to be mentioned that these deposits are unsecured ones. Next is any repayment has to be made along with interest. Next provision is about any depositor aggrieved of any non-repayment of any depositor part or any interest thereon. A depositor can seek tribunal for such damages or losses. Next is any company with respect to now section 74 is about any repayments that has been pending since before the commencement of this Act 2013. Now, there is also a provision under this section that any company can seek tribunal for any extension of such repayments, and this tribunal might look into the financial position of the corporate and analyze the amounts involved therein and then take a decision for extension. Now, coming to the rules. Now, the tenure for which a deposit can be invited shall be a minimum of 6 months and not more than 36 months. Wherever a deposit is accepted for a lower term, which is less than 6 months, it has to be a minimum of 3 months, and the deposit amount shall not be more than 10% of its share capital, free reserves, and securities premium account. Secondly, a depositor can hold the deposit amount along with joint ownership up to a maximum of 3 persons. Next is the limitation on deposits. So there are 3 criteria of maximum deposit limit that a company might call for. So firstly, any company cannot exceed more than 35% of its aggregate share capital, free reserves, and securities premium account. Secondly, a private company or any company specified under IFSC, any company which is specified IFSC public company can accept deposits up to 100% of its share capital, free reserve, and securities premium account. Now, specified IFSC public company is that particular public company which might be registered under RBI and SEBI under the regulation of IFSC authority under the SEZ area. So second limit is for private companies. Now this is there is no maximum limit for these type of companies. Firstly, a startup company which is a specific private limited company, and the limit is for 10 years of, since its incorporation. Secondly, a private company which will follow 3 conditions, which will fulfill these 3 conditions, can accept deposits to no maximum limit, which is firstly, it should not be any associate or body corporate, associate or subsidiary of any other company. Secondly, it must not have any borrowings which shall be twice of its paid up share capital or 50 crore rupees, whichever is less. Thirdly, it should not have defaulted in any repayment of borrowings at the time of accepting the deposits. So all 3 conditions must be fulfilled. These type of private companies have no limit on the acceptance of deposits. The third limit is with respect to eligible companies. Now, what is an eligible company? A company which will fulfill 3 criteria altogether. Firstly, a public company. Secondly, the company has to have net worth more than 100 crores or turnover of 500 crores. Thirdly, it should obtain prior consent of the company in its general meeting by way of resolution. Now, the resolution can be an ordinary resolution if at all the amount is within the 181C rule. Also, this resolution has to be filed with ROC before inviting the public. Now, coming to the limitation of eligible companies, there are 2 limits, one from its members and secondly going public. So, when an eligible company calls for deposit from its members, along with its already outstanding amounts from its members, the aggregate shall not exceed more than 10% of share capital, free reserves, and securities premium. For persons other than its members, the amounts altogether cannot exceed more than 25%. For an eligible government company, the restriction or the limit is up to 35%. Now, this is just revisiting and extract on the maximum limits. Firstly, any company cannot accept more than 35%. Secondly, IFSC or any private company, 100% can of its share capital, free reserves, and securities premium can be accepted. And for exemption criteria, as in for no limit, startup company can invite from its members for its first 10 years. Private company who fulfills 3 criteria, there is also no limit. For eligible company, 10% from members and 25% from public. For eligible government company, it is 35%. There are other conditions for inviting deposits, which is firstly, interest shall be paid or brokerage shall be given to the agents. Now, these persons who are soliciting for the on behalf of the company has to be authorized by the company. Any other person cannot be charging brokerage to the company, and the maximum rate has to be the rate specified by the RBI, not beyond that. Now, once the circular is issued by the corporate, there shall be no alterations made to the terms and conditions. Coming to the credit rating. Now, credit rating has to be mandatorily made by any eligible company once in a year, and the copy of the same has to be submitted to the ROC. Now, the rating has to be given with respect to its liquidity and net worth that the company can has the ability to repay. Now, the circular has to be submitted to all the members, has to be sent via registered post along with the acknowledgement, or any speed post or electronic means is also fine. It has to upload the copy of DPT1 on the website. Next is the circular has to be signed by majority of the directors and to be filed with the ROC. Now, coming to the validity of the circular. Now, the circular shall be valid earlier of the following three criteria. Firstly, within 6 months of closure of the financial year, or the date of AGM, or where there is no AGM, the due date of the AGM. So, any earlier date from these three would be the validity of the circular. Otherwise, it will have to issue a fresh circular every year. Next is auditor has to certify that the company has not defaulted in any previous repayments of any deposit or interest. If at all a company has defaulted in any repayment thereof, the certificate has to be made by the statutory auditor that the default has been made good. And since then 5 years has been elapsed. So within the 5 years period, the company cannot issue or accept deposits for that matter. Creation of security. So wherever a company accepts secured deposits, it has to create a charge on its assets under Schedule 3, which excluding the intangible assets, of course. Provided any amount of such deposit plus interest thereon shall not the value of these deposits and interest shall not be more than the market value of the assets, and it has to be valued by a registered valuer, merchant banker, any merchant banker for that matter, who is registered with SEBI, or any practicing chartered accountant with 10 years of experience. Now, the security that has to be created shall not be in the form of pledge, and this has to be in the favor of a trustee of depositors on any specific movable property or any specific immovable property. Now, the appointment of trustee has to be made before issuing the circular, and a consent has to be obtained from the trustee as well, and that has to be published in the circular also. Now, the trust deed has to be executed before 7 days of the issue of circular in Form DPT3. Now, the trustee or trusteeship companies cannot be related to the company by any way. It shall not be a director, KMP, or any other officer or employee of the company or its holding subsidiary, or any relative of the director, KMP, or any other officer for that matter. Now, these trustee cannot be indebted to the company or its subsidiary or holding associate company. The trustee shall not have any material pecuniary relationship with the company, and not have been entered into any guarantee arrangement with the principal debts of these companies. Now, any trustee cannot be removed after the issue of circular and before the expiry of his term, except with prior consent of all the directors, as in unanimous decision of directors. And if at all the company has independent director, he has to be present at such meeting. Coming to the duties of the trustees, now trustees have to take care that the assets cover the entire repayment of deposits or not. He has to ensure that the circular does not contain any misleading information for that matter. He has to ensure that the company does not make any breach of the provisions or covenants of the deed. Also, he has to take necessary steps for procuring a remedy for breach of any terms of the agreement. a trustee has to call a meeting of holders of depositors whenever the requirement arises. He has to supervise and implement the conditions of the contract as well. Now, the trustee also has to do such acts in the event of security becomes enforceable. Also, he has to protect the interest of depositors and resolve their grievances. Now, the trustee can call for a meeting of depositors wherever a requisition has been signed by 1/10 of the depositors in value, or in other matter, in case of any event happening. Also, say for example, any default happening in place. Again, the deposit has to be accompanied by a application which has to be filed by a depositor, along with a declaration that the funds the depositor is making is from his own funds and not borrowed. Now, a depositor can also nominate a person. So, wherever the deposits are accepted, the company has to provide for deposit receipts to the depositor uh, within 21 days of receipt of its money or realization of check, or that for that matter. Now, this is again a very important provision that the company should maintain liquid asset and create a deposit redemption reserve account. Now, every company has to deposit 20% of the amount of deposits maturing in the following year on or before every 30th day of April. And the account has to be opened with a separate scheduled bank, and those amounts are not to be strictly utilized for any other purpose other than the repayment of deposit.
Actually, the Nupur said deposit redemption reserve account. It is not redemption, it is repayment reserve account. Because deposits are to be repaid, not to be redeemed.
He has
Yes,
actually
yes.
used the word repayment only. While saying it, she said redemption. Otherwise, he has
Yes.
put it correctly.
Yes, sir, yes.
Deposit repayment. Yeah.
Okay. Now the registers has to be maintained for deposits under Rule 14. The registers include basic details like name, address, PAN of depositors, particulars of guardian in case of a minor depositor, any particulars of the nominee, deposit receipt number, date and amount of the deposit, duration of the deposit for that matter, any rate of interest decided for that matter, due date of repayment of interest, mandate and instructions of payment of interest or non-deduction of tax at source, any dates on which the payment of interest shall be made, any particulars of securities or charge for that matter. Now, the entries into register has to be made within 7 days from the date of issuance of the receipt. Now, this register has to be duly authenticated by the director or a secretary or any other officer who is authorized by the board for that matter. Now, the registers has to be preserved in good order for minimum 8 years time. So, any premature repayment of deposits happening, so say for example, after 6 months and before the term, whatever the term may be, a reduced rate of 18% can be given by the company. Now, this reduced rate is not for the matter of, certain people who are into defense who are providing war risk and other related benefits for these particular investors. Coming to the form DPT3 under Rule 16. Now, every company to which rules applies. Now, this does not include NBFCs or banking companies. Every other company has to file form DPT3 in any other matter. Now, DPT3 includes those amounts which are outstanding in nature as on the 31st day of March. Secondly, the amounts include deposits and the exempted deposits as well. Now, the auditor has to audit the figures as per the audited balance sheet and also provide a declaration in that effect. Now, one has to attach certain documents like copy of trust deed or copy of instrument creating charge list of depositors in case of actual active deposits for that matter. Now, this is again a newer rule, we can say. So every financial statement has to mention the any amounts that has been received by a director or a relative for that matter by way of notes. Now, any company who does not repay the deposit or part thereof or any interest thereof, it has to refund the amount along with an 18% of penal interest thereof. So I've extracted the procedure in brief. Firstly, ordinary or special resolution has to be passed for the procedure at a general meeting. Secondly, credit rating has to be taken. First year is mandatory, and for eligible company, every year has to be taken. The company has to appoint a trustee and obtain his consent prior to the issuing of its circular. A trust deed has to be entered into along with the trustee 7 days prior to the issue. A board resolution, as per the issue of circular, has to be filed with the ROC. The issue of circular has to be posted in the website. Again, advertisement has to be made in English plus vernacular language after the issue of the circular. Application form has to be deposited with from the depositor along with its joint names or nomination within 21 days. A charge has to be created. A charge form CAG 9 has to be filed with the ROC within 30 days of its acceptance. A debenture redemption reserve account has to be created on or before 30th April of every year. Again,
Not
register of
debenture
deposit.
redemption reserve.
Deposit,
before
Sorry,
it
sir.
is
Sorry. Debenture repayment reserve. Yes, sir.
deposit repayment reserve.
deposit repayment reserve.
Yes, sir. I'm so sorry, sir. Deposit repayment reserve. Yes. So let's understand the common grounds or differences between section 73 and section 76. Now, section 73 is specifically made for the private companies or public companies which are not eligible companies. Section 76 provides for terms and conditions for eligible public companies which crosses the threshold. Second, the source of funds may be with respect to directors or relatives in case of private company and members for section 73. And for section 76, the eligible companies might go for public acceptance as well. Now, limits for directors is no limits, but declaration has to be made that the funds are from own funds and not borrowed. Secondly, if at all it is accepted from members, Section 73 companies can accept not more than 25%, and compliance with respect to the terms and conditions has to be done. So for the eligible companies, it is 25% again. I think I have skipped one pointer here. It is 25% for eligible companies for members, and 10% for members and 25% for public. I think I have skipped that particular percentage. And for any eligible government company, it is 35%. So the advertisement and or issue of circular has to be mandatory in both the cases. Credit rating is acquired for both the cases, but for eligible companies, it has to renew or make new credit rating every year. Now, website display is mandatory for eligible companies and not for Section 73 companies. Joint ownership can be made in both the cases. Not more than 3 persons may be involved. Rate of interest shall not be more than the rate prescribed by the RBI or the brokerage thereof. Deposit insurance. Deposit insurance is actually omitted by the by way of circular from the Act.
Yeah, Sudhakar actually such about the insurance matter very category. He said, since no insurance company has come forward, ultimately government has actually scrapped that insurance. Yeah.
Yeah. So yes, sir. So in case of secured deposits, the creation of charge has to be made in both the types of companies, and for unsecured it has to be quoted in all communications that the deposits being accepted are being unsecured ones. The tenure in both cases is similar, 6 to 36 months, and if at all it is less than 6 months, it should be minimum of 3 months, and 10% criteria is there for both the type of companies.
Somebody has put up a question, is there a cut-off date of deposits for filing the charge with honesty?
Yes, 30 days of acceptance, sir.
Because charge creation is starts immediately 30 days, correct? That
Yes.
charge creation will go as per the, what you call, section 70, what is it? I think there's
27
another
onwards.
yeah, 77 onwards. So that says actually within 30 days. So that has to be followed. Yeah, go ahead, Dippo.
So there are certain other repercussions apart from the chapter 5 chapter 5 provisions, which go in as director disqualification under section 164(2). Now, any company fails to repay any deposits, the directors are also held liable, and the directors shall not be reappointed in that matter, and they shall not be appointed in any other company for a period of 5 years. Secondly, the company cannot make any investments or loans or provide any guarantee for that matter until the default is subsisting. Third, now any company cannot also pay dividends for that matter, so long as the failure continues. Other remedies are also there, as in under section 245, which belongs to class actions. So any class of depositors, any requisite number for that matter. So they have mentioned 100 in number, or any other value of deposit that might be prescribed. So these depositors can come together and ask the tribunal to seek orders against any damages or losses that they might incur. They can also demand other suitable action against certain persons, which includes companies, directors, auditors, or any expert advisor for that matter as well. So you want to put some light on this?
Which one? Which one?
The other remedies or any repercussions under other provisions of the Act?
See, when a company, because of any genuine reasons, if they are not able to repay the deposits, they have to approach NCLT and they have to seek for extension of time, which normally NCLT do give it. But once they approach the NCLT and they got it rescheduled, the companies have to ensure that as per the reschedulement, the deposits are to be paid. And this 164(2) will be applicable only if the default is continued for a period of 1 year or more. Suppose after the default, if it is you are going to NCLT and the NCLT got it rescheduled, then 164(2) will not get attracted. But you will not be able to pay the dividend, because there it is very clearly mentioned that in case the NCLT has given that extended period, unless until the extended period is also completed, you cannot, and you made that thing, okay, what's called, whatever the deposits you are repaid, till such time you cannot, what's called as, declare any kind of dividend. And another important thing, I don't know whether you have already came it or not, section 75, that is for damage of frauds. In case at any point of time, if you are accepting the deposits with an intention to defraud the people, that means no intention to repay that and all, and it is the company and whoever are the people who are involved in that, they all will be responsible, and section 447 gets triggered. And but we all know that section 447 is the most stringent section, wherein both it is not a compoundable offense, and wherever it gets triggered, and at the same point of time, the monetary as well as the criminal penal provisions gets triggered. That means you have to pay the penalty as well as, sorry, the fine, as well as also to the imprisonment.
Again, the bar.
Yeah.
Yes. Yes. So I've covered that provision here. So section 75 penal provisions are with respect to the intent of defrauding the depositors basically. So every officer shall be held personally liable without any limitation for that matter. Secondly, he shall also be liable under section 447, which sir rightly mentioned, which would be with imprisonment up to 6 months up to 10 years of time, along with a fine which might extend to 3 times of the amount of fraud involved. Secondly, Section 76A prescribes penal provisions for any contravention of provisions with respect to 73 and 76. So, for every company, the amount of deposit plus interest would be refunded along with a fine, which will be 1 CR or twice the amount of deposit, lower of these two, and this might extend to 10 CR as well. Every officer in default shall be liable for imprisonment extending to 7 years along with fine, which will be starting from rupees 25 lakhs to 2 CR. Wherever intentional fraud has been come into picture as per section 73 and 76 as well, the penalty as per section 447 will also be imposed. The last penal provision is about Rule 21. Now, the rule says wherever a company fails to comply with the provisions of the rules, and wherever for those matters is not the penalty is not covered under the section, it shall be covered here. Now, this includes a company and every officer in default for a fine up to 5,000 rupees, and continuing offense shall be in furtherance of 500 rupees per day.
One more thing, what one has to remember, go back. See here, if you see that every officer is personally liable means, especially it is the company secretary who will be held responsible for all these things. It was so under the erstwhile 58A also of the 1956 Act, the company secretary always used to be held responsible as officer in default. Several times the company secretaries in those days we used to work for companies which are accepting deposits, because 80 to 85% of the companies they used to default in repayment of deposits. In fact, that is one of the reason wherever the companies I worked for, I ensured that the companies are in a position to repay the deposits, because as a company secretary, that's what I say. If you're any company over leveraging, then you have to be very, very careful about that. When you are giving the advertisement itself, that time you will come to know what are your financial position and what kind of deposits you are accepting it. So the company secretary will come to know about the intentions of the company at the time of you are releasing the advertisement or the circular itself. You will come to know whether what kind of promoters you are working for or what kind of management you are working for. And accordingly, you have to be, careful wherever it is so. Okay.
Yes, sir. Also, they have specifically mentioned that they will be liable without any limitation on the liability.
Correct.
And also the further borrowings for the business itself gets jeopardized, because the bank borrowings, the bankers will not give the loan to a company defaulting under the deposit rules.
And second thing is, in the good olden days, we used to have a wrong notion in our minds that, and of course, there was a reason for that also, because ROC used to trigger the penal provisions or impose the penal provisions very sparingly. And they used to be very kind-hearted also, especially towards the company secretaries and all. Whereas now, if you read Bala sir's articles properly, you can't even get proper sleep in the night. Because the way the ROCs are penalizing the companies, the company secretaries, irrespective of whether it is a private company, closely held public company, listed company, unlisted company, they're not bothering at all. And if it is 3 times the penalty, the maximum penalty they are imposing it. So one has to be very careful to a while, and wherever I am, where I will be held number one liable. And let us not sit in our ivory towers that no, nothing is going to happen to me. Forget about that. Am I correct, Bala sir?
Yeah, you are absolutely right. As you rightly said, nowadays the regulators are realizing the importance of the company secretary. They say he is the person who is the compliance officer. Directors are there only to look out for the business, etc. Once the director appoint the company secretary. It is the company secretary alone. As actions which are specifically mentioned in terms of the compliance will be taken. That is the way they are looking. Not only that, even the regulator going further steps. What is the company secretary are supposed to do as per the sectoral standard, mandatory or non-mandatory, and as well as referring the guidance note issued by the ICSI also. That is why, as you are also emphasizing, I am also saying we must actually go through even the non-mandatory sectoral standard guidance note issued, because so much efforts have been taken by the institute. So many experts are putting their head and bringing in the things which are very useful to our profession. We must go through, we should get educated ourselves. Which according to me, with many of the younger people, the reading habit is not there, it is actually lacking. Because reading habit somehow they're going slowly. So people don't want to read everything, ready-made, just putting a button, ask Google.
Yeah, I see that even the practicing company secretaries who are acting as secretarial auditors, even their responsibilities are also going and accountabilities are going immensely increasing day by day. The reason being, on one side, it is they might not be having the kind of bandwidth with them to check the things thoroughly, and unless until the client is having a good image or reputation, you never know which client is doing what. And if you are not able to point out, and tomorrow if ROC notices that, unfortunately, that company secretary will be in trouble. In fact, recently when last week I was addressing some what's called as in the IOD session instead of directors, where I was talking about the independent directors, and they say, ki, bhai, after listening your lecture, it is very scary to accept an independent directorship. So similarly, people here should not say, ki, bhai, that you are triggering these penal provisions and all, you are scaring us. It is not the question of scaring, it is the question of, to understand the depth of the pool before taking a plunge into that.
Bringing the
And
awareness.
once you become a company secretary and a key managerial person, you have to understand the gravity of that particular role which you are performing. And unfortunately, the days are not very conducive to us. So one has to tighten their seat belts, to ensure compliances properly.
Very recently, I was talking one of the colleague of mine. Just general talk. There is a wording is there. We used to say whenever we were all young, we used to taught Mata, Pita, Guru, Deva. That means the first known God to us is actually Mata, mother. The next known God to us is actually Pita. The next is actually Guru. Then thereafter are the unknown, invisible God, Deva. Deva means God. That is what we used to say. Now he says probably this Mata, Pita, Guru, Deva is required to be replaced. Mata, Pitu, Google, Deva. In place of the Guru, it is to be replaced with Google. He was just joking. But that is what it is happening nowadays. Any question you ask anybody, they don't bother. They don't want to refer anything. They simply want to ask the Google, whatever the Google says, irrespective of whatever it is, that is the answer. That is what it is becoming nowadays. That habit has to go away. Sonali, you would like to add anything?
When I meet some company secretaries who have just passed out, what they say is that we get this answer on Chat GPT. So Chat GPT is another dangerous tool which is coming handy by the fresher company secretaries. They think that AI can help them grow like anything. But sensible use of AI is still okay. But then when you use AI in a way that it becomes destructive for yourself and the organization, it is very scary. I mean, where the world is going now.
See, Sonali, when you are actually saying all said and done, technology is actually good. But at the end of the day, it is garbage in, garbage out.
Yeah.
So ultimately, the reality, unless we understand the gravity, we cannot go into the grassroots level and know the things.
They don't understand that ChatGPT itself is a machine learning. They are learning from us actually.
Correct.
They can teach us. They are learning from us.
Yeah, that's right. Yes, Nopur.
Yes, sir. So there was a case study basically elaborated by NCLT and CLP in two matters. So this was about whether the membership fees for clubs would be coming under the definition of deposits. So they have ruled out 4 inferences from this to understand what deposit would be. So firstly, that the fees were in nature of fees and not in the nature of deposit. Okay. So secondly, the intention of the parties, both the parties were much clear that the payment is in terms of the agreement and as part of certain services to be provided to the parties and not under any form of deposit for that matter.
So it becomes a revenue
Thirdly,
basically. It's a revenue. Yeah.
it is a sort of revenue, right, ma'am? Very true. So thirdly, it also made inference that the fees were fully refundable wherever the terms of the agreement might agree to, and the refund is not along with interest for that matter. And lastly, the club neither advertises nor solicits for its applications for the same through public via any circular or advertisement for that matter. So these 4 inferences were drawn from NCLT in these 2 cases of Dr. Lohit Shivatej versus Anytime Medicare Services Private Limited and VEA Annamalai Chettiar versus SVVS Veerappa Chettiar. So, sir, we would be starting with accounting and taxation slides. So, my colleague Chandan will take you through these slides. I'll ask Chandan to take ahead.
Yes, thanks, for thank you. It was a very great presentation of understanding how deposits work basically. Let me take everyone through the accounting aspects of the deposits as well now. Whenever we think about or whenever we want to know how the deposits are accounted, basically it is very important to understand what are the nature of deposits. It's a kind of an investment that another person is making in an entity. So whenever there is an investment coming in, we generally Indian companies follow 2 types of accounting. That is one as per Indian GAAP, that is generally accepted accounting principles, and the other one is as per Ind AS 109, that is Indian accounting standards. Investments under Ind AS is ruled by Ind AS 109, that is accounting for financial instruments, wherein we account for all the deposits through fair value measurement. Suppose we can see in the slide that there is an example that a company receives a deposit of 10 lakh rupees at an interest rate of 8% per annum for 3 years. That does not mean that we are accounting 10 lakh rupees exactly as deposit amount as per the books of accounts in Ind AS, because we arrive at a present value of future cash flows that occurs through this deposit, through which we calculate what would be the fair value of such deposit, and then we account that to be the formula for initial recognition of such deposit. So whenever we are following Ind AS, the initial recognition would always be at fair value plus transaction cost, and subsequent measurement would be through an amortized cost method, which we will go through in the later slides. And whenever there is an interest part, that is, suppose in the same example, if we can see, when a company receives a deposit of 10 lakh rupees at an interest rate of 8% per annum, the interest expense for a company would be 80,000. That is only with respect to the contractual cash flows. But when it comes to the following method of Ind AS, we calculate the interest expense to be on a fair value method, wherein we calculate the initial recognition into the 8% whatever we get. Suppose the fair value of such a deposit would be 12 lakh because the market rate would be somewhere around 10%. So 12 lakh into 8% would be our interest expense as per books of accounts. And for the taxation purpose, it would be 8% of 10 lakh, that is 80,000, whichever is paid. So interest, whenever we follow Ind AS method, would be always on effective interest rate method rather than contractual interest rate. Now we'll understand how accounting will be happening through IGAAP method, that is generally accepted accounting principles. It is almost as similar to Ind AS, but the only difference is in Indian GAAP, we follow historical cost instead of fair value method. So whenever we are accounting certain deposits through Indian GAAP, we follow historical cost plus transaction cost. That is, suppose we are getting a deposit of 10 lakh rupees with a transaction cost of 50,000. Our initial recognition value would be 10 lakh plus 50,000. That would be 10 lakh 50,000 rather than calculating the fair value. Nupur, can you please move to the next slide? Yeah. As per IGAAP, the deposits would be accounted as investments similar to Ind AS, but focuses more on traditional cost or historical cost instead of fair value measurement. Example, the same deposit under IGAAP would be recorded at a value of amount received with interest expense being recorded as per contractual rate. Next slide, please. Yeah. Coming to the taxation aspects of deposits, the interest payment whichever is being made would be deductible expense as per Income Tax Act 1961 under the section 36 subsection 1 clause 3. That is interest income. If at all we have made deposits in certain other companies, suppose we are the ones who have seeded the deposits, then such interest income is also taxable in the hands of company under the head income from other sources. Yes. And then we'll conclude this with respect to accounting and taxation aspects, as it's a very brief concept wherein we have only few little concepts which are as similar to investments, and we don't have any specific concepts related to deposits. Thank you.
Yes, sir. So we've done with the presentation
Okay,
and
we'll
accounting
run
and
through
taxation aspect as well.
Yeah, we'll run through the questions now. Amount received from ECB, we have actually discussed. Capital goods, I think you already explained actually. Capital goods is not covered, it is only the goods and services. What about the security deposit received by a foreman? Security deposit also, I think we talked about it. Please clarify again on mobilization of advance. I think Sudhakar has explained actually advance received. He has given an example also within 365 day allotment, appropriation, etc. I think so. Whether can an individual give a loan to another entity, that is individual HUF, including company, etc., from other loan taken by him or own past capital to earn the interest on the said loan given. He repay his loan or the interest from the interest income, whether he has to register himself in RBI or any other place.
I think if I'm not wrong, in case of members, there is a restriction, members and directors, that they have to give a declaration that they are not giving these deposits from borrowed funds.
Yes.
Okay. So if you are giving the deposits in general, even if I borrow some funds from somewhere and I'm giving a deposit, then there is no issue as such. Only in case of exempted deposits like members and directors, there, if I'm not wrong, Nupur has mentioned in her presentation also that they have to give a declaration that these deposits are not from borrowed funds.
Exemption is available for any non-interest bearing amount received and held in trust. Now, X Private Limited has received an amount from another. Y Private Limited is as a refund of the rent deposit. The said deposit was not originally paid by X Private Limited, but some of the director has made the payment and the said deposit is not reflecting in the books of the company. The company X has refunded the deposit amount to the director. Can we take exemption in this case as non-interest bearing amount received or held in trust?
See, these are all, one has to be very careful about one thing. When you are giving as a deposit or when you are giving it as security deposit or whatever it is, the company should be careful. Don't give a color to an exempted deposit to a transaction. If the transaction is a real deposit transaction and you are trying to give a color to that by showing all these kinds of things, then tomorrow when the regulator comes and if we are not able to establish that this is an exempted deposit, you will be in trouble. So you can have n number of hypothetical questions that is very difficult to answer.
Yeah, this is
very rightly mentioned, Sudhakar, very rightly mentioned that it should be you know whether it is deposit or not. So don't give color of deposit. That's all. Thank you.
Does money with the held by the employer from the payment being made to the contractor, retention money, as per the contract agreement, which will be refunded to the contractor after the defect liability period, is exempt from the definition of deposit? Please clarify.
Aksar has answered this.
This is again the same thing because it is given for the specific purpose.
No, Aksar has already answered
Okay.
in detail. Next only Aksar, it is exempted. It is written.
See, not
Yes,
only
sir.
that, not only that, it is not a question of deposit or exempted deposit. This is not an exempted deposit. This is not a deposit also. See, because in case of a deposit, what happens is you will go and give it to somebody. Here, what is happening? It is a contractual obligation. As per the contractual obligation, you are deducting the money, and after that, at the end of the contract, you are repaying it. So you cannot even call this as an exempted deposit also, because when we are discussing about exempted deposit, we are talking about the exempted deposit as per the rules. So let us not call this particular case as exempted deposit or it is a deposit. It is not falling in this what's called purview.
Category of deposit only.
Correct. Correct.
Actually, when we have to interpret the deposit rules, it has to be a conservative interpretation every time. And what is actually exempted under deposit rules is exempted. Yeah.
Keeping 20% of the maturing deposit in the next financial year before 30th of April of the previous financial year. This amounts to the blocking of the funds for more than a year. Is it April of previous financial year or the financial year the deposits are maturing?
It is the deposits maturing in the financial year as well as depositing maturing in the next financial year. Both the things together, then 15% of that you have to deposit it.
Is there any cut-off date or filing charge that you said? But only thing here says when there is a multiple deposits on different sales from which date 30 days will actually count it.
Day one, the first security where you are supposed to create it. If there are multiple deposit schemes are there and you are giving the same security, ranking pari passu, then what happens is when you have to create for the scheme one, when you have to create the security from that time on, that will be the first one you have to create.
As the employer asks for the performance security, this I think you discussed because this will not come. Bank guarantee, performance security, etc. What is the protection for depositor for fraud in case of the violation of the deposit rules of the Companies Act? Section 447, though receives penalty for the 3 times the fraud, but as much as cases of penalty points is not realizable.
See, if the companies are repaying you the deposits, you have to go to NCLT. NCLT is the only area where your grievances will get resolved. As far as the penal provisions are concerned, that is on the companies when they are defaulting in repayment of deposits. Suppose if I am the deposit holder, what I have to do is I have to go to NCLT and lodge a complaint that this company is not repaying, or go to ROC. These are the two places.
Under section 75, every officer, does it mean all levels of the officers, the secretary department and the finance department?
An officer is a defined term under the Act, and also
Yeah.
the person responsible.
Yeah.
Also
Correct.
the person responsible, both.
See, I think probably people have to refer the definition section. Definition section very clear says who is the officer of the company. Somebody has actually put a remark. Artificial intelligence help in disseminating the information that is available in the domain up to a particular period. It only gives the quick response of the queries or gives a solution, but the tool should be used with the cautious. It is not a replacement of the human intelligence. Yeah, that is correct. That's what we also
Actually,
said.
what he is trying to say is even to utilize artificial intelligence, you have to use your intelligence.
Yeah, that is right. In case of the money received from the flat holders in the name of the society maintenance to the company, whether the set amount will be covered under the concept deposit. I don't know why the society, because society is not coming under the Companies Act.
Companies Act, yeah.
Society is governed by under the register of the societies. So I think this is irrelevant here.
Some societies are in the form of companies. Some cooperative housing societies are in the form of companies. So they say in case of a money received from the flat holders in the name of the society maintenance to the company, whether the said amount will be covered under this, you have to ensure that whatever the purpose for which you are taking it. Okay, suppose you're taking the service charges and you have to appropriate it, then there is no problem. That maybe it may fall under the 365 days for goods and supply of services, 365 days. Within that, you have to appropriate it. Same rule will be applicable here also.
Okay.
So similar to the provision that we saw, the example which we
correct.
saw, membership fees. That was also a Section 8 company for that matter.
Yeah. No,
In
it is
case,
not a question of Section 8. See, societies,
Yes, yes, yes.
they may not be Section 8 companies. See, if you
Yes,
see in
yes.
Bombay, there are several cooperative housing societies which are limited
Hmm.
companies.
And some are registered under Cooperative Societies Act. So that
Yeah, some are
that
registered
bit has
under. See,
been, yeah, that bit
both
has
are
been
there. Both are there.
disclosed.
So wherever it is applicable, Companies Act is applicable to you, then this is what I told you the rule.
in case of the advances within 365 days, there is no cooling period between the repayment and acceptance again. How the provision will be effective?
There is question of cooling period. You appropriate the advance for the intended purpose. That means 365 days you are not able to appropriate means you are giving a color to the deposit.
Also, in case of the expenses payable to the company in the name of the facility charges, expenses incurred on setting up the office premises by the other company, whether the said amount will be covered under deposit.
See, again, the same thing, these expenses and whatever you are saying that if you are not able to appropriate within 365 days, that means what? It is certainly a deposit. Because normally what happens is all kind of advances, you will be within a 1 year, you will knock it down for the intended purpose. It will never happen. Rarest of the rare circumstances, it may happen. In such case, Sonali has already mentioned it. For 11 months agreement and refund that money, again, take that advance, whatever it is and all. Those things are to be done.
Correct. That is the practical solution. I think she has actually given really what is practically people can do it to come out of this situation. I think that is all the questions I have here.
Bala, I think there is no questions. Only one issue Nupur has not dealt with at a great length is the DPT3. One or two things I would like to mention about the DPT3. See, if till I'm going through the form, if you see the amount of information what they're asking you, apart from your paid up capital and all other details, they say total number of deposit holders on 1st April, total number of deposit holders at the end of the financial year, then amount existing on the beginning, accepted during the year, outstanding at the end of the year, how much secured deposits, how much unsecured deposits, amount of deposits repaid during the year, balance of deposits outstanding at the end of the year, amount of deposits matured but not claimed but not paid. Okay. Then you are saying that particulars of liquid assets, particulars of charges created. Then they are giving that the rule wise, which are how much is the amounts which are falling in that. If there are about 12, that whatever the 18, 19 exempted rules are there, they are asking on each and everything. That also you have to give the balances on what is the opening balance, what is the additional amount, what is the repayment amount, what is the any other adjustments, and the closing balances. So if you see the DPT3, virtually every receipt of money to the company, more or less you have to connect with DPT3. That means what, that's what I told in the beginning itself. It is like an MRI, they are taking it. And when you are connecting this DPT3 with your financial statements, unless until you are very, very careful, when the scrutiny takes place, maybe some transactions may fall out of the exempted deposit rules. In such case, they will say that these are the deposits and your non-compliance of deposits and the penal provisions gets triggered.
Nupur,
So
you can
as a
stop
company
sharing the
secretary,
screen.
one has to be very careful. And similarly, as a secretarial auditor also, one has to be careful. Please do go through the DPT3, what has been filed or going to be filed with the ROC. Don't leave it to your finance colleagues, because most of the times what happens is that DPT3 is to be prepared by the finance department only. But if they prepared and give it to you like a postman, we are not supposed to file it with the ROC. We have to go through the entries very minutely and meticulously. And wherever we need to have some kind of aberrations, if we notice it as company secretaries, we need to discuss with our colleagues. And wherever it requires some appropriate notes, we have to have it in the file notes, we have to have it. So that whenever the secretarial auditor or a statutory auditor or a regulator questions, we should be able to answer it, satisfactorily. So please be careful about DPT3 is concerned. According to me, that is a very crucial document. And in the coming years, that is going to take a lot of a significant shape. That's what my view.
No more
Dipti, that's all
questions?
I done with the questions. That
Yeah,
anybody would like to ask
I
anything,
think-
they can raise their hands.
I think no raise of hand is also.
No
there.
raise of hand is there so far.
Yeah, I think we have elaborately discussed everything. So thanks everyone. Thanks for your participation. Thanks Sonali. Thanks for your time.
Thank you, everyone. Thank you.
Thanks Sudhakar, Mr. Bala, Nupur. Wonderful presentation, discussion. Thank all the participants. Meet you next Saturday. Till that, bye-bye.
So I
Thank
must
you.
congratulate everyone for this 150th webinar. 150th webinar means is almost the 3 years consistently and continuously. You are organizing Deepti these webinars, and my full compliments to you and everyone who is supporting you. Thank you very much.
Thank
So
you.
also I am so fortunate, I'll mention, ma'am, the first time I presented the webinar, that was the 1 year completion date. And today it is
Ah, okay.
Yes, yes, ma'am.
Great, Nupur.
So I'm
Yes,
always
ma'am.
fortunate to be with Mehta and Mehta. It's always my pleasure, ma'am. Thank you so much.
Thank you.
Excellent. Thank
Thank you.
you.
Thank you so much, ma'am. Thank you.
Thank you,
Thanks
everyone.
all. Thank you so much, everyone, for joining.
Thank you so much. Have a good day, good weekend. We meet in the next week.